So in a recent video that I uploaded, I highlighted the differences between day trading and swing trading, and in that video I spoke on which trading strategy would be more suitable for you depending on your situational lifestyle. Now in this video I want to talk about why I'm an individual who is gravitating more towards swing trading. Not saying that I'm completely done day trading. I'm not saying that. In fact, I'm still day trading. However, I'm scaling back on my day trades, meaning I'm day trading less often and I'm day trading with a smaller position size in comparison to what I'm doing with swing trading, right? I'm swing trading more and with a larger position size. So in this video, I want to highlight some recent market activities. I want to show you guys a trade that I partook in and show you guys why I absolutely am loving swing trading. So with that being said, guys, all I really ask for in return is for you guys to simply tap that like button, because as you guys know, YouTube doesn't really push out your videos unless an audience shows engagement, and it really helps me put out more videos when you guys show love. So with that being said, just simply tap that like button. That's all I ask, and let's go ahead and take a look into the charts. So right here, we're looking at ticker symbol NIO, which is electric car company NIO. And we're looking at this stock simply because this is a great example of why I love swing trading, right? So right here, we are looking at it from a 4-hour chart view, simply just because, as I highlighted in the other video, when it comes to day trading and swing trading, you're going to want to look at a larger time frame because you're trading for something that is not a short-term trade. It's more of a long-term approach to it. Not as long-term as investing, but definitely more than just simply holding for one day. So let's go ahead and kind of break down what's going on. I know there is a lot on the chart, so I hope this isn't very overwhelming. I'm going to kind of dissect everything that's going on over here on the chart. So right here we have a descending triangle pattern, right? So basically how you map out a descending triangle pattern is by simply having a descending trend line, and we see this descending trend line, right? We see a high over here, and we see it's just kind of adhering to this trend line going down. And then we also have a support, and the reason we have the support line mapped out over here is because in the past NIO had a resistance, and then of course right over here it showed as a strong support. So when you put these two together, you have a descending triangle. Now what happens typically with a descending triangle? Well, just as the name implies, it's a descending pattern. So if we kind of go to this image I have over here, we see that this is a descending triangle, and we see that of course the wedge over here with the support line and the trend line going down, that as price action bounces up and down, as it gets closer to the corner of the triangle, typically it's going to go ahead and break below. That's what the descending triangle typically results in. Now, something that I want to highlight is that when it comes to trading, we're not just going to, predict something just because we drew a pattern. In fact, these patterns are simply just so that when things approach a certain price, we look into it more effectively, right? So as we get closer to this wedge, most likely it's going to go down, but that's not always the case. As we see in NIO, that was not the case. So it's just this tool or this pattern is simply just to see what's going to happen. If it breaks below, then we have this descending triangle, and it's probably going to keep going lower with the trend. Now there's another reality where with a descending triangle you could have a pop-up or a break of the trend, right? And this usually happens because the support line, right, had a lot of buying pressure, and so that resulted in an upward pattern which broke through the descending triangle, and then you have whoop, price flew up, and then we just have a break of trend. We have the trend going down, and then with that support the trend going up, which is why a lot of times when we talk about technical analysis, I think one of the most common misconceptions is that when you draw a support line, a resistance line, a trend line, that the stock has to be adherent to it, and that's not always 100% the case. In fact, when you draw these trend lines, it's just so that you can measure, is the stock going to break above or below whatever you mapped out. So I know we kind of got into technical analysis a little too much, but we're going to go ahead and kind of, continue on with this swing trade that I partook in. So we have NIO and this descending triangle, and it broke through. And here is where I entered into my position for this swing trade. So it broke through, and NIO went up about 22% in a matter of just a couple of weeks, right? Now, 22% is it's very considerably large. It's a great percentage in my own opinion. Now, you guys have seen on this channel, I have made 200% in a day, but I'm gonna be 100% honest. That's not something that is very common for me, and it's not something that I could replicate or just perform daily. In fact, when I did that 200% trade that I did in a recent video, it was me trading options, which is a derivative. It's much more complex in the sense that there's a lot of moving particles. Now, in this video, I'm not going to go ahead and break down options. That's probably for a separate video. But for options, of course, you're going to have larger percentage gains. But with stocks, it's not very common for me to do 200% in a day, right? Definitely not something common. And then when it comes to day trading, I'm not even doing really 20% in a day. If I were to tell you that I was doing 20% in a day trading, that would be me pretty much lying. That's not something I can do often. I mean, maybe there are some tickers that are as volatile to do 20% in a day. I know there's a lot of penny stock traders that are able to do that consistently, but with the stocks that I typically tend to trade, which are mid cap to blue chip stocks, I pretty much cannot do 20% in a day, which is why swing trading comes along into play, right? Let's go ahead and bring out the calculator. If you're trading with a account size of $30,000, right, and you do 20% in a month, right, because obviously this was in a span of just a couple of weeks, so let's just put that within the month, you come out with a profit of $6,000. Now, $6,000 for the month is pretty good money. It's not the richest person in the world, but it's definitely above the median household salary in America. I mean, if you multiply this by 12, of course you have $72,000. Now, you could add that with if you are someone who is day trading, or if maybe you're just simply swing trading, making your 20% for the month, and maybe you're garnering 72,000 just off swing trading, but of course you also have maybe a career that you're also participating in. Because again, and if you watch my other video where I highlight the differences between day trading and swing trading, I mentioned that when it comes to day trading, your percentage gains are going to be smaller because obviously it's just for the day. But on top of that, you're also having to participate daily in the market, and not everyone has the luxury to sit down at a computer for hours of the day to stare at the market. So not everyone is doing trading full time. And in fact, most individuals in the retail side of trading have a full-time career. Maybe you're a lawyer, you're a doctor, maybe you're God knows whatever you do for your profession, right? So this is why I think swing trading is such a great, effective way to participate in the market, because it's more passive than day trading, meaning I didn't have to stare in the computer all day just to make this 20% trade. In fact, I just mapped out, I came up with a strategy. Hey, if it breaks below, then I could either short the stock, or I could just not trade it. Or if it breaks above this pattern, then that just indicates that a break of pattern has occurred, and this is most likely going to start going up. And if it starts going up, then if it breaks this pattern, I'm gonna go ahead and enter. And I didn't have to watch a chart every single day. In fact, what I did is I just kept putting alerts, right, which is something where you could set up with your broker, right, where you could simply just put, hey, when it reaches this price, send me a text message, right? And you could do this on the TD Ameritrade Thinkorswim platform, which is what I'm using. But I also use the Webull platform, which, by the way, I have a link in the description below, or if you sign up with Webull and you deposit $100, you'll be eligible to receive up to $1,600 in free stocks, right? And I'll talk about that more later at the end of this video. But of course, Webull is another platform that is great for swing trading, simply because you can map out these trades and set up alerts. And you could also set up stop losses, which I often do use for day trading, but sometimes for swing trading I'm using more alerts because I'm just kind of wanting to receive that text message to then look at the market. So again, swing trading offers a more passive way to kind of trade in the market, in comparison to day trading. However, it's not as passive as someone who's investing long term in the market, where they're just simply taking advantage of the dollar cost average method, right? But definitely I love swing trading, and it's something where I'm getting more comfortable with using a larger position than with day trading, right? And the reason I say this is because when you're day trading and you're looking at, let's go ahead and look at NEO in a 1 minute time frame, right? Look, these moves happen in just a few minutes, this 1% move, right? And so if you're trading with 30,000 or whatever amount you're trading, right, that you feel comfortable with, especially if it's a lot of money to you as an individual, it could get difficult to make those decisions in such a quick amount of time. Now, day trading is not something I recommend for everyone. Of course, there are individuals who are successful, but I think a lot more individuals will have more success when they swing trade or invest in the market rather than day trading. But again, that's just my personal experience. And also, there's a lot of research that goes involved that shows a lot of, day traders failing. Of course, I think some of the research is kind of misconstrued. I had a video kind of explaining why, but we're not going to go ahead and dive into that for the purposes of this video. But also, I want to take it or kind of just explain why I also feel more comfortable with it, putting in more capital. So if you think about it, right, hedge funds, they're often trading with millions and millions of dollars, right? And it's very rare that a hedge fund is going to execute a day trade. I mean, it happened recently where a hedge fund, purchased shares of AMC stock and they, sold it in the same day and made $40 million in profit in one day. It does happen, but it's very rare, right? And in fact, most hedge funds, what they do is they swing trade or they hold or they do longer positions, right? It could be a few weeks, it could be a few months, where they do positions where they kind of put in little by little. Because if a hedge fund were to put, let's say, $100 million into a stock in one single day, that's enough money to manipulate the market and just push that stock tremendously up, and that would just kind of be bad for the hedge fund, as they're exposing too much capital all at once. Also, when you're trading with that much capital, you also come into a liquidity issue where, depending on what type of security that you're trading, there might not be enough volume for you to exit out, which is why, or even enter in like that, which is why when it comes to trading with a larger amount of capital, it's more common to do longer term trades where you if I kind of zoom in, where you might either add in simply little by little. For example, if I was trading with millions and millions of dollars, the way I probably would have traded NEO was, once this breakout pattern occurred, I probably would have added some more here. As it broke above the simple moving average, probably would have added more there. And then if it broke above, depending if it broke above this resistance, I either would have sold or added more into that position there. So when it comes to trading with a larger amount, like what hedge funds do, it's very rare, again, that they day trade. Not saying that they never do it, but it's very rare. So that's just my opinion. This is why, again, you guys don't have to follow whatever strategy I do. I think there's multiple different strategies that you could take advantage of when it comes to, exposing yourself into the stock market. But for me personally, I find it more comfortable to enter in larger positions with swing trades, as the movement is a lot less slower, and I could manage my risk. Now, of course, I'm managing my risk by setting up alerts, and also, occasionally setting up stop losses, trailing losses, and things of that nature. Again, it's really up to you how you handle it, but at the end of the day, you want to make sure that you mitigate your risk. Now, as I was talking about earlier, I mentioned Webull. Little side story with Webull. When I first signed up with Webull, by the way, like I said, if you deposit $100, you'll receive 2 free stocks. I actually got a free share of Google, which at the time of that I got that free share, was worth $1,000. Google is now worth $2,451 at the moment, and I'm still holding that share. So essentially, just for signing up with the Webull platform, I got $2,451 of Google stock simply by signing up for Webull. Now, I'm not saying you're gonna get Google stock yourself. It's really random, the 2 stocks that you will get for opening up an account and depositing $100. But it's definitely something that I recommend. I don't recommend brokerages that I don't personally use. Again, you guys always see in my videos, I definitely use the TD Ameritrade platform. I use the Webull platform, and I do have don't judge me, but I do have a small amount in Robinhood. Definitely not a brokerage that I really recommend for trading. I think they're okay for investing. But anyways, that's pretty much wraps it up. Hopefully you guys get a perspective of why I love swing trading. Hopefully this video provided value. If you liked anything in this video, please make sure to hit that like button. If you have any questions, leave them down in the comment section below, and consider checking out the links in the description below, because one of the links is going to be a link for my free Facebook group. And essentially, it's just a group that I created of individuals or for individuals interested in trading and investing in the stock market. So feel free to join that community. And with that being said, guys, my name is Justin from Approach and Profit, and I'll see you on the next video.